Okay, recording this video after close of trade Tuesday, 2nd of August 2011. Well, what a couple of days. Extraordinary. Before I get to my charts though, please permit me a small rant, ladies and gentlemen. We are now down 25% on the Italian stock exchange. We are down 2.5% in a day on the US markets and down 8.5% from the highs. We're pretty close to that 10% kind of technical correction level that's so important. And the Aussie dollar was down 3 cents in 24 hours from above $1.10 to 107 versus the US dollar. Extraordinary moves happening right now. Top of the news in Australia this morning, a man who made 2 holes in 1 within an hour on the golf course, and the average weight of a women's handbag is 3 kilograms. The lack of mainstream media understanding of what is happening in the world economy beggars belief. We will get, as the general public, everything we deserve with this downturn because we're not paying attention, and frankly we couldn't give a damn. And the people who should be telling us to pay attention and give a damn don't even understand what's going on. I thank God that the Reserve Bank of Australia did not raise rates here. We had a high CPI number, but I think they're smart enough to understand we're in the middle of a huge debt bubble in Australia, and we're tied massively to the Chinese economy. So although they gave us this cock and bull story about being worried about what's happening in Europe with the debt crisis, that's the story they told us why they weren't going to raise rates in Australia. I think hopefully they realize that the economy is fundamentally weak here. We've had extremely poor retail sales numbers for about 2 years, and that we're so over-leveraged on the consumer side of things that any rate rise would just kill any chance of economic growth. And then if we get some kind of little stumble in China, it's all over for Australia. But, you know, when I look at my Aussie dollar charts, looks pretty damn bad anyway. We've just had a flush signal and this kind of almost like a double top at $1.10, so it all might be changing around. So enough ranting, let's get to the charts. And let's start. Volume chart today. 2.8 million contracts traded on the downside. You know, capitulation volume looks like this, kind of above 3. I still think we got a little bit of a ways to go, but it was fairly significant, and this is quite an important level on the charts that we're kind of approaching around the 1250s. In terms of trend, Better X trend flipped over. I talked about this last week, and this move has kind of continued down, and we're just trailing this stop down. So, you know, was this kind of some form of capitulation volume, and we're going to test back up into the 1300s, 1310 levels? Not sure. When I look at the sign charts, daily charts, talked about this a couple of days ago where we fell through support here, and that looked like falling through the ice, and we've definitely kind of continued this down. Better sine wave has now flipped around so that we have that actually turned out to be a cyclical high at that point, a resistance level, and we're now kind of crossing over at the lows. I still think we've got a little bit of a ways to go. The reason for that is if this is a cycle move, kind of high to low here in the daily time frame, the equivalent kind of lower time frame, which is the 45-minute chart, needs to see an end of trend warning signal, and here's the 45 chart. So this is where we flipped into a downtrend here, broke into a downtrend below 13, kind of 25, 27 around here. This has to make pullback to end of trend before this move is finished on the downside. In terms of oscillators, better trend, we're definitely kind of overextended here at negative 106, but we've not had a bullish divergence pattern on the better trend values, and so this looks like this last kind of short trade is going to be a goodie. And just to recap the hypothesis chart, I was pretty nonplussed with this a few weeks ago, but you know, here it is, and a couple of comments to make. So this is not a bar been changed on this kind of forecast that I had kind of back here. When was this? First and mid-June that I was making this kind of hypothesis chart, and the reason why I chose this level here as a stopping point, that would have been 10% from the Bin Laden high. This is at 1361. Right up here, so that was a 10% correction level, and that's why I picked that as the bottom of this move. And I think that's kind of the region that we'll start to see this maybe turn around and test back up. From my perspective, the thing that kind of stands out for me on this chart were two things. First of all, I'm always early, so the last time I did a hypothesis chart was here, and the market eventually kind of followed that pattern, but I was a good kind of week or 2 weeks kind of early in this forecast hypothesis line, and the same thing on this latest kind of forecast here. So that's kind of a common that's the nature of my trading. I try to be in and out too early, and it's even true on this kind of higher time frame. The other thing is that we extended past both these kind of topping levels that I kind of was seeing in a hypothesis chart here. I'm being careful not to say forecast, because it's not a forecast, it's just hypothesis about what happened, and in both cases we overshot those levels. In some ways, overshooting those levels kind of gives the general public extra confidence that new highs are being made, and so they're getting trapped into moves, whereas if we're making kind of lower highs like this, the technical analysts would be saying that's kind of a weak pattern, and be calling downtrends and so on. So that's not necessarily I'd say a weakness of the hypothesis. It's just it'll result in a different kind of psychological behavior of the general market, because they will feel as if they're trapped in at these higher levels. In terms of where we went today, 4,500 tip bar chart. I mean, we started off the day coming into a cyclical high, a couple of blue professional bars into these highs, stopping volume patterns, bearish divergence. It was extremely weak here. We'd had sell-off kind of volume on the prior day, but kind of testing back up, and then we kind of sold off in the pre-opens. This is Monday's close, Tuesday's open, so we kind of sold off, flush signals, and rallied from there. But this buying activity was really weak at this point here, and actually when we go down to the 1500 tip bar chart, we formed a really nice little end of trend warning signal here, and the market just fell away from there. I want to make a point about this and blow this up a little bit. Weak buying coming into here, normally what I like to see is exhaustion buying at this kind of left shoulder. The pullback to end of trend then is kind of the weakest level, with a bearish divergence, and the market kind of sets off. What we had in this case was, coming into this move, was exhaustion selling there, and then testing back up to the highs. You can see these two blue professional bars kind of getting taking out the top here. And this is a pattern I'm calling kind of a last roll of the dice. Sometimes, yes, you see kind of exhaustion buying at this point here. Was extremely weak buying at this point, but this was a rush for the doors. If you're going to see an exhaustion selling signal like this at this point in the move, we'll get a little bit of a bounce from there, but then when you see the professionals kind of coming, you'll get a bounce just because all the sellers have sold at that point. It's kind of, we just kind of absorbed the selling, and so we naturally kind of bounce back. But on that bounce back, you can see the professionals are getting short, and as soon as the lows of those blue professional bars get taken out, you know that there's something afoot. So this is kind of, normally you're looking for these exhaustion buying and selling signals once a trend move has kind of got going. But when you see it here almost starting this move early, and then this little test back up, this is what I'm calling this last roll of the dice. The professionals using that opportunity, the last roll of the dice, to kind of get short. And then when we kind of test back up, amateur bar, no demand, fails, goes to the downside, breaks through cyclical support, we're on the way down here. On the 4,500 tip bar chart, I mean, I actually traded quite a lot. I did 7 trades for 10.25 points. I was out in the 70s here at this point down here on the 4,500 tip bar chart. I mean, I was quite happy to be out there. High to low range had been 10 points there, and I pulled that off. with my day trades, but then when I woke up in the morning and saw we'd just totally collapsed, this end of trend did not hold on the way down, although it seemingly had, all the right kind of components. We'd had exhaustion selling on the downside here, pull back to end of trend. You can see blue professional bars both here and at this end of trend level, and then bullish divergence at this point. You'd have thought that would have kind of held, but time of day, we were 1 o'clock in the afternoon. Trend days, if they're going to reverse, they're going to reverse before or around 11 a.m. And this was well after that, so we're into a trend day where we're going to finish on our lows, and just lost confidence when we tested back down there. But coming into the close, we had extreme exhaustion selling and a whole bunch of blue professional bars kind of coming into that close. So, the pros could be using this as an opportunity to pick up at these levels down in the 1250s. But I don't think it's over until, on that sine wave chart, on the 45-minute chart, we see a pullback to end of trend. So interesting day. I think I'll see what I'll do in terms of tagging on my day trades, because as I said, 7 trades, a lot of activity, recorded a whole bunch of videos. Not sure it's worthwhile putting all of those on. I'll maybe we'll see. I'll tag them together, see how long they run, maybe make a second video out of it, because for some people they do find it kind of useful. But anyway, there we go. We're in a lot of trouble, in terms of trendline breaks and all that kind of stuff. I think the tenor of the market now is really kind of changing. At some point, because of this extreme kind of selling, we're going to find a bottom over the next few days and test back up. That'll be kind of the key, kind of what happens after that test back up. So anyway, extraordinary day, huge range on the market today. I hope everybody picked up some decent points, and good luck with your trading tomorrow.